AsiaPacific Aerospace Consultants, also involved in some of the preparation of this review of the space legislation by, as you wrote a report to me that went up to it.
Well, I led the industry effort for the Space Industry Association back in 1996 for the original Space Activities Act. So I worked directly with government back in those days to actually pull that together.
I wasn't going to embarrass you by saying how long you've been.
Yeah, well, unfortunately, it's been a long time, Donna. Well, no, fortunately, it's been a long time. I should say that differently.
I'll leave you to it.
Anyway, for refreshing change, we're actually not going to talk about law. We're going to talk about something that is still very interesting, I think, to most of you, and that's called space insurance. But we need to reframe this discussion. Space insurance is more than just this issue, this liability thing, this impediment that gets you, that helps, that keeps these small satellites from getting into space. It is actually a financial tool, and we're going to go through why it's a financial tool in this presentation. So, where do I have to point this to make this work?
Just press that forward button, it should go.
So first of all, a little bit about who we are. AsiaPacific Aerospace Consultants was founded by the one and only head of an Australian space agency, Dr. Bruce Middleton, back in 1993 when he was deposed from the space office. And he ran the business for quite a while, till 2003 when he retired. And Kirby purchased it off him, and we have run it collaboratively ever since. We're probably best known for a lot of the, more recently, for the studies we've done for the Australian government. In 2010 and 2011, we did studies that were the background information for the what became the space utilization policy at the time. And then last year, we completed a study on the characterization of Australian space capabilities, which is available on the space.gov.au website. We've also done a lot of work recently for the European Space Agency on what's happening in space in the 17 nations, Asia-Pacific nations. But we also are, among other things, experts in space insurance. Kirby was the managing director of GIO Space, which he grew from a very small organization to, which was founded as a result of AUSAT offsets initially. He grew that from a 5,000, would you believe it, a 5 million a year business to a $170 million per year export business. And in that context, he was, we grew it, or he grew it, and I joined him at one stage to one of the top 10 space insurers in the world. Unfortunately, it was dumped when AMP decided to buy GIO and didn't want the business divisions. But we have extensive experience in space insurance. We're going to share some of that with you today. So, again, is space insurance, what is insurance? Is it a necessary evil? That's the way it typically gets described or viewed in this particular environment. But when you have a number of, it's mandated by the Space Activities Act, the liability issues. So in that context, we're going to change your frame of reference. You need to think of space insurance not just as a necessary evil, but actually it's a financial risk management tool covering much more than just liability. And we'll get onto that in a second. Ultimately, insurance addresses varying levels of financial exposure and different phases of business risk. So it is a financial tool. This is very important to everybody in this room. I mean, so those of you in the research community may not be looking to start a business, but then again, maybe you should be. And the financial insurance can actually be a financial tool to help new space businesses get started. This is where you were taking over, I believe.
I apologise, my voice is a little bit gravelly, so I hope everybody up the back can hear, because I sat up the back for the last couple of talks. And this is, as Bill has said, most people in this room have thought about insurance as a liability, as in the sense of liability. But insurance is really more about protecting the business. It's not just about mitigating technical risks, but it is something that can be used to secure the future of a business, and in this case, a space business. If you use that insurance intelligently, it can also eliminate risks for other parties that you're dealing with. Now, if you take an example of a launch service startup, we've heard of one potential, I know there's another one or two that will be speaking tomorrow. One of the difficulties in getting into business is trying to get customers, often well in advance of when you're going to go to launch. And one of the issues for your customers may be, can they get insurance? And can they get insurance at a reasonable rate? So by designing a program that says to your customers, yes, we're going to guarantee that you will have insurance available at X rate for the first 10 or 20 launches, it gives them the confidence to be able to sign up with you as a customer. And as a business starting up, having customers is a good thing when you're seeking finance. Another important point here, and I think it was being touched on in another context earlier, is that if you are going to have insurance, then you really need to start thinking about that very, very early so that it gets written into your contractual arrangements with your suppliers, with your customers, for risk transfer and so on. Now, one of the things that I find is very common is people think about insuring the asset. If you have car insurance, you insure your car. If you have boat insurance, you insure your boat. It's a common misperception that people think of space insurance as insuring the satellite or the launch. It's really about protecting your business against any damage or losses or delays that might occur as a result of an event, such as your satellite launch failing, your satellite not working, your satellite partially working, things like that. The essence of insurance is to put you back in the position that you would have been in if you hadn't suffered a loss. And in that context, it is vital that you fully understand all of the implications to your business if something goes wrong. Now, one of the other things that is often overlooked is that it's not just you, the owner of the business, that has a stake in the insurance requirements. There are other people, your equity providers, your debt providers, even your management and staff, your customers. They have an interest in knowing what's going to happen if there is a failure. And for example, if you are thinking about starting a business, you will generally have debt and equity. Well, guess what? People who provide debt want to know they're going to get their money back, which means you must have insurance in nearly all cases if you're going to raise debt as part of your finance. Again, here, it's important that if you can use your insurance to address the needs and the interests and the concerns of those broader stakeholders, then you have a better chance of getting your business started. I'll hand it back to you.
So, again, we're trying to highlight just the way in which insurance works. And again, I started my talk saying most people in this room think of insurance as launch liability insurance. Section 8 down there, third-party liability. That's where most people are focused when they hear the word insurance in the current Australian context. That's usually what they're thinking about. But this insurance effectively looks at the risk in the various different stages of your program or your project. So you go through the various different stages and you can get insurance for each of these stages. Satellite manufacturing and testing. Transportation, you want to make sure it doesn't fall off the back of the truck when it's going to the test site or to the launch site. Satellite integration and testing at the launch site. What happens there? There's a lot of nuances. The launch itself, which is the most, historically, it's the most risky event that will take place in the satellite's life. Then you've got the in-orbit commissioning stage, which is the second most risky stage. Then you've got the operational life of the satellite in orbit. Then any decommissioning phase that you might have. Obviously then overriding all of this is your third-party liability. And again, business interruption insurance. That can be a really crucial component because suppose you're actually starting the business. You're actually, get that thing up there, what happens if the launch fails? Well, you might have launch insurance, that's fine. But, so you're covered to some degree, but what about your staff? You know, it's gonna take you some time to get that next satellite back in orbit. You're gonna have to perhaps build it. And you know, what's that gonna be? Maybe another 1-year build, a 2-year build. In the bigger satellites, it could be a 3-4-year build. So you need to figure out how are you going to retain your qualified staff? How are you going to keep yourself operational during that phase when you're really getting yourself going again? So that is an issue to consider, that business interruption insurance at that early stage, because it's the type of thing that can make or break your business if you do it properly or you don't. So one of the key issues is to make sure that you have coverage and appropriate handoff with the insurance across each of those stages. So the exposures that you might have, I think we've talked about some of these, the cost of the replacing the satellite, and that may be different than the cost of the first satellite. You've got the cost of a replacement launch. In some cases you might have a reflight guarantee, but not in every case. You might have to go out and pay for another launch. So you need to make sure that your sum insured covers the entire gamut of issues that you're going to be confronted with, the potential risks and liabilities that you've got. Again, I've talked about a lot of this, costs to keep the business running while replacements are made. The increased costs of debt or equity. You might have issues with your shareholders or your stakeholders. The loss of market to rivals. You know, this business, you've got to get there fast. The early bird gets the worm. You need to make sure that you can stay in business long enough to still make your business go. And obviously, the next time around, you might have increased insurance costs with this as well.
Okay, so just to finally close out, because I do realise we are standing between drinks, or between you and the drinks. Again, this is particularly apropos for the startups. Space insurance can deal with a number of risks that are facing you and your potential customers. Often you're dealing with new technology or technology that is not well understood or is understood to have risk attached to it. There may be developmental risk in your program, and to the extent that you can take away those concerns for your customers, insurance potentially can deal with program delays, it can deal with technical risks, you can build in coverage that gets you to certain technical milestones. That means that customers can know with a degree of confidence that they can sign up with you, and that helps you getting started. One case that, one case that I was actually involved with, I won't name the company, but we were trying to commit customers to launch services many years in advance of the launch. And so what we needed to do was find out a way to ameliorate the risks such that customers would sign up in advance. Now, I can tell you it is much easier to raise money when you have signed customers that you can show to your equity providers. If you can achieve that, that's much easier to raise money than going out and asking for it, saying the old build it and they will come sort of philosophy. Another important part is taking a longer term look at the future of the business. What milestones, what strategic milestones might you need to reach in order to have a successful business? So if you can ensure the achievement of those strategic milestones, that again provides confidence to investors that their money will achieve a return on investment. The company won't fall over before it gets to that point. The same thing for debt providers. If they know that you have a business plan that's based on a fleet of a constellation of satellites that are going to live for 5 years, then they want to know that that activity is protected such that they can get their debt returned. So I guess the takeaway point here is to think about space insurance as a critical financial tool.
And one thing that we actually haven't put on the slides and haven't quite mentioned, yes, there is a cost to insurance. But if you are actually raising money for an additional 0.01%, you can perhaps buy the insurance and cover this entire range of things that we're talking about. So it's worth considering, it's worth talking to somebody who knows about this early in the piece and build that into your considerations. Just to conclude, again, we want to shift the framework, shift the mindset on this. Space insurance is not just a necessary evil. It is a powerful financial tool to help assist in new space businesses. Space insurance is about protecting your business, not just your specific asset. It's vital that the insurance protects your business through all the phases of risk. And that there'll be varying different types of sums insured during that stage, various different levels of risks. So there will be different levels of insurance cover needed. And you must make sure that there's a proper handoff between those various different stages so that you don't end up with the one little slot where something happens and you don't happen to be covered. So you need to really think about this early. Understand all the potential impacts that can happen to your business. And believe me, as former space insurers in a big way, we have come across just about everything that can go wrong in a space business. And Donna is smiling at the back, and she's come across quite a few as well. So it is surprising. It's well worth talking to people who've been around the traps a bit and understand those things, because there's some strange things that can happen in the launch business.
Ask us over drinks, we'll tell you something anecdotal.
And that's the final phase that we're talking about. That insurance should be seamless and cover all stages of risk. So with that, I will not give Donna the chance to blow her vuvuzela. We'll close the session. And I guess, Donna, we do have some time for questions at the moment?
We started late, so I had allocated 10 minutes for questions. Do we want to do the questions?
Well, let's do some for the collective group, I
Should
guess.
we get all the speakers up, just in case there's questions? Because I know there was one question for the QB50 team.
Can I ask a question before I stand up?
Yeah, all right. I don't know. That's not allowed. You can't raise the speakers.
Before
All right,
Elliot.
Elliot.
So there was one person who wanted to ask a question.
He can ask it to himself, yeah.
From the
Okay,
first
you
one,
can
or
ask it to yourself.
a couple more? No? Okay, well, I said, go for it, ask it.
Look, my question is for you guys. We've talked primarily about third-party liability. To me, there are two really different types of insurance. I take QB50 for example. We've only have to deal really with the third-party liability.
Yep.
If I separate the two, there is the insurance that is imposed on us. If I wear the business hat,
Yep.
there's the insurance that is imposed on us that I would have to take to cover my government's liability to third-party damage. And there's the insurance that I might want to take.
Sorry, let me stop you right there for a second. That is not the government's liability, that is your liability. You are on the hook for third-party liability. The way the Space Convention works is that the government actually is on the hook first, and then through domestic law, they pass it back down to you, but ultimately it's your responsibility.
I realize that, but I just want to sort of separate the two to say, because it flows through the government, it's something that comes through from international law to domestic law to us.
Yeah.
So that's something that we're in a way obliged, at least under the current legislation. And you've got your business insurance, which is really a protection for your business that you have a discretion in taking. So how do you to me the cost of the two and the amount of control you've got over each is completely different. So, for example, with third-party liability, it is imposed.
Right.
If I have to run through an MPL, we've done that. If I don't run through an MPL, it's 750 million. With my business, I can actually estimate what my business is, and I have a discretion in what I want to insure.
Right.
So, how do you separate the two in your model, and what advice do you give? I mean, what?
Pay to Caesar what is due to Caesar. I mean, you're not going to get or move jurisdictions. You're not going to get a license unless you cover that. That's the law. That's the way it is in Australia at the moment. You have to live with that. Or find a way around it as you've done.
But this is really the bulk of buying.
And that's the bulk of what you're thinking about. If you're in a business situation, if you did not have a mandated requirement, you could make a business decision. The fact that there's never been a launch liability claim under the conventions, you might make the business decision.
Read page something.
Yeah, fair enough. Okay, I knew there was one, but they're very, very rare. Let's put it that way. And so you might make the business decision that you don't need that. The issue is, all of this ultimately is a business decision. What we're trying to say is, don't think of it as just a cost. It can be used as a financial tool, particularly when you can insure some of the things that might get your business sustained rather than have one loss knock the whole thing out. I'm not sure if that's covering
Yeah, well,
your
what I want to sort of drive towards is there an inherently greater difficulty in getting that number 8 compared to the others?
No, not at all. You just
I
need to
might
go to
keep
the
this
right
short
person.
soon because we want to
Yeah,
get
yeah.
our questions
You need to
about
go to the
it.
right people for all of that.
Yep, yeah. And I will add that it's not just the government you want to protect, as you say, it's your own institution. So it's the
Exactly.
university. You don't want the
Yeah.
university to get sued if CUBESAT hits something, or if you're a company, you don't want the company. There's a question back there, but I feel a moral responsibility. Was it you that had a question in the first round and I cut you off?
Yeah.
Yep. Did you still want to ask that?
Yes,
Yeah.
if the university, for the QB50 team, if the universities had transferred title to KVI, would that have absolved you of liability in the Australian government for liability?
And the act is triggered if there's any Australian ownership, physical ownership of the object going above 100 kilometres. So it would depend on the contract. If they gave all the ownership away, then the answer is probably they wouldn't have to authorise it under the Australian.
So why wasn't it done that
Well,
way?
this was an option that was
Yes, we looked at
entertained
that.
at one point.
And there were good reasons not to.
I mean, it was the last worst case scenario for us.
Why did you want to retain ownership of it?
Well, look, this is a.
So we could be celebrating Belgians.
There are a number of reasons.
Yeah.
There are a number of reasons. I mean, it's.
Yeah.
It's.
I might, perhaps I might get you to talk about the reasons over your drink, and I might go to the last question in the corner.
Thank you very much for your talk. I'm a bit confused. It seems to me a number of issues have been conflated. The majority of people in this room are from universities. And it seems to me that you're talking about insurance for someone else's money in your business. It's distinct from an owner business. So it's a very different game with third-party liability and insurance if you have owners, because they'll fight it out. I know Thredbo, Alpine Resort fight it out. You reckon you got a call, right, you go to court. The ANU is self-insuring as well. So there's a number of things that are not relevant to us in this. Apart from if we've got a company of 150 million, which we don't.
Are you talking about all these other insurance types in this last talk, or do you mean generally the entire thing we've been talking about?
Well, we're talking.
Do you think third-party liability
Put in
insurance?
100K or something or other and 5 man-years to build a QB50. There's nothing you can insure in that. I mean, how would you determine what it's worth?
Well, there are ways you could do that. The question is whether the people who are putting up the money want to protect the expenditure of that money. And yes, our comments were more directed to the commercialisation that we're seeing. We had a talk about a potential launch service. We're going to have more talks tomorrow about startups. Startups inherently, they're commercial, and the people who are going to back them are going to want to have protection for their funds, whether it's
Well, startups, if you want to use the word startup as distinct from business, then yes, startup is gambling someone else's money, whereas a business is using your own to produce a product.
Oh, there's a blurry line between those two.
Well, it's an important one. Depends on who's making a decision on that.
I'm going to say...
Could I just make one point though? What about transportation of satellite to the test facility? Again, do you want to make sure, it could be a risk that you take, but if you've spent all this time working on it and some amount of money, if the thing gets damaged on the way, you know, maybe it is, sorry?
We use prayer.
Yeah.
It's a university.
I might move to the, that sounds like an excellent segue for your pub talk, and I'll take one more question from Mr. Davis. And then, well, let's just try and keep it to a couple of minutes and then we'll go.
Let's assume you're insuring against the cost of building another satellite. Can you give us a ballpark estimate of the percentage of that cost that you would have to pay by way of a premium?
It depends on which of these risks you're talking about. And you wouldn't exactly insure against the cost of another satellite. You would insure your program.
Yeah, but
And then the program, it varies depending on these various different categories.
just
of risk.
as a
Premium rate is a
give us
function, premium rate is a function of the selection of launch vehicle. Some are more reliable than others. The design of the satellite, again, some are more reliable than others. They're the two big determining factors.
sure.
And that will probably range from, say, 5% for a well-known launch vehicle with a good track record and a well-known satellite design. A lot of CubeSat missions are coming in at the moment around 10%, 9.75. And if you've got a highly unreliable vehicle, you've taken the cut price path, then your insurance costs are going to go up accordingly. So it's purely determined by choice of vehicle.
Yeah, thanks. Yeah.
I might defer other questions to over a beer or a glass of wine or a glass of mineral water. Can I have a round of applause
And can we have a round of applause for all the speakers today, including our chairs who have, on occasion, been very timely.